Hi, I'm Dave.
And I'm Paul.
And we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. Hey, everybody. Welcome to the show. Today, we're coming to you from Birmingham, Alabama. We just finished up a 2-day Infinite Banking Concepts Think Tank. It's an annual event where practitioners come in from all over North America. And I spent a couple days together, and it was great. And I think we'll probably just dive into that and talk about what we learned today. What do you say?
Yeah, no, absolutely, Dave. I think one thing is for sure, we're surrounded by some of the greatest minds in the life insurance and the infinite banking industry here at this annual think tank. This was my first think tank. Didn't get to go last year because of the Rona.
Right, which it sounds like you have right now.
Yeah. I'm sorry about my voice, everybody. I'm not really sure what happened. Anthony's voice was a little screwed up the other day, so maybe I got a little whatever. I feel fine.
Yeah, well, we probably stayed up a little later than we usually do. A little past my 10 p.m. bedtime.
Yeah, that too. I was hitting the Tom Collins pretty hard, so.
Yeah, but that's good because we were hanging around other practitioners and like you said, some of the most brilliant minds that are practicing and teaching this concept in North America. I mean, Canada and the U.S. Just some fabulous people to be around and people who are hungry to learn and to share.
Yeah, a lot of new people.
Yeah,
a lot of new practitioners or people that aren't even practitioners yet that are just new to the concept, which is also promising to see like the next generation that'll carry Nelson's message forward into 50, 60 years from now.
Right. Yeah, which is super important. So, we covered a lot of ground the last 2 days. What was your favorite part of it? The highlights for you.
Other than getting to see people in person that you've only seen on YouTube or Twitter video or whatever. I liked Jayson Lowe's presentation today about family banking. So one of our fellow practitioners, Jayson Lowe, who has a podcast called Wealth Without Bay Street.
Right.
Him and Richard Canfield, which is a great podcast.
They're on YouTube as well.
There are our Canadian compatriots, super guys, super smart, and really do the Institute and Nelson's message. They really carry that message forward correctly.
Yeah. And the great thing about that, they're in Canada, which they use different life insurance companies than we use. But really what this last 2 days was really about and kind of getting down to the core of it is that stuff doesn't matter. Like the company, the illustration, everybody wants to dive into these details that really kind of, it's not what infinite banking is all about. Infinite banking is a process, and whether you practice that process in Canada through a properly designed whole life insurance policy or in India through whatever financial tools or capabilities they have there to do it, it's a process and it can be replicated anywhere. The best vehicle to use for that process, of course, in North America is going to be whole life insurance, properly structured. What about that? So Jayson was talking about the family banking, which is really, really cool. So tell us that story.
Yeah. So he gets up there and has some good slides, and he started out, getting us all motivated, screaming IBC as a group, of 100 and whatever people, which was fun. But what he talked about was this whole structure, starting with really, it sounded like his dad, with the life insurance policy, taking the life insurance policy on his father, that first generation, and then it expanded to him, being the current generation, and then the children, and then eventually those children will have grandchildren, and they all have, how many was it 60? It was 62 policies,
62 and one in underwriting.
63rd policy in underwriting, right? And we're talking policies of all different shapes and sizes, right? But they're all designed for infinite banking. And what he's talked about now that they've compiled a certain amount of cash value, now that some of the teenage kids are starting to drive and guess what? That child has access to capital from the family bank. So he says, "Hey, Dad," or "Hey, Uncle Jason, I want to buy my first car, my first used car. It's I don't know, let's make up a number. It's $10,000. I've got a part-time job or a couple of part-time jobs, so I want to borrow money from the family banking system." The cool stipulation they have with this family banking system, right? The payment, the interest rate is 10% and it's non-negotiable. 10%.
10% to the family bank.
To the family bank.
Because if you're going to pay some other bank 5%, why wouldn't you pay your own bank 10%?
That's right.
So what does that 10% actually do?
Right. So what it's going to do is enable, first of all, the kid borrowing the money is going to learn kind of how the whole family banking system works. He can see the older generation benefiting from that cash flow, right? Let's say the policy loan interest rate is 5%. What that 10% payment is going to do is it's going to pay that policy loan back faster. Once that loan is paid back faster, there's still that extra cash flow or extra capital coming in that could be used to expand the family banking system, meaning via another policy.
Right. Yeah. And then maybe 5 years from now, when that 16-year-old turns 21 and he wants to buy a better car, maybe he has a job and is making better money and he wants to trade that in and get something else, he gets to go back and use the exact same bank and the exact same capital to buy the second car, because that capital never left the ecosystem, the financial ecosystem of that family. So it's just a phenomenal concept. Really motivated me to, I haven't been too intentional about teaching my boys. I've got 3 boys, right? About here's how you take a loan. Here's how you play honest banker with yourself and pay that back. But I do have the opportunity with my oldest approaching driving age very soon, where he's going to want a car. I'm going to want him to have a car.
That's
because then
free,
he can
free
run,
taxi driver.
Exactly. He can run his brothers to practice, pick them up, do whatever I don't want to do anymore.
Right.
And this is going to be a perfect opportunity to teach him the function of the bank, and the fact that in Jayson Lowe's specific example, nobody in his immediate family, or actually his expanded family too, nobody will ever have to go to a commercial bank.
I love it.
They'll never have to fill out, endless paperwork to be qualified. They'll never have to look at what's your income, what's your credit score. Doesn't matter.
Yeah. Let's unpack, Nelson Nash. And again, we're always going to encourage you to pick up his book, Becoming Your Own Banker, Unlocking the Infinite Banking Concept, written in 2000. This is where all of this knowledge and all the fundamentals for this concept come from. His just phenomenal 92-page book. But let's unpack. It's not like you're going to start financing a $1.4 million house purchase right off the bat, or a $300,000 education at Harvard over 4 years, or whatever it costs now. It's something ridiculous.
Yeah, it's not immediate, right? Nelson says it'll take how long?
20 average person's going to take 20 years to become
completely free
to compete. Yeah,
of that financial system.
Absolutely.
But once you're there, everybody behind you, your children, your grandchildren, your great grandchildren, they will be free as well, because you're going to perpetuate the cycle.
That's right. That's right. And having gone through, several mortgage processes over the last decade or whatever, it gets worse for me every time as I acquire more assets and I have more things going on with our finances. Well, guess what? The underwriter of the bank, they want to see all of that.
Yeah.
And it's a huge pain in the butt. And those of you who are, friendly with me and know me know that I complain about that constantly.
Yeah. Yeah. So that concept is something I'm going to start implementing right away. I mean, Jayson talked about doing an annual family banking meeting.
Yeah, I love that.
Yeah. So we'll implement that and, review the boys' policies. Hey, here's your policy. Here's where it's at. Here's what it's doing right now. And here's how we use it. Let's find some real world examples of how I've used it and teach them.
Are you going to have shirts made?
It's actually going to be a shirtless event. Sure. It was just all boys.
All boys.
Yeah. We don't wear shirts.
Yeah, we can't do that.
Yeah.
I thought that was super cool though. Like, so what we've, our comrade up here has, as he's doing this presentation, he's showing photos of the family, the extended family, cousins and uncles and brothers and sisters. And, they got these shirts for their annual family banking meeting. And it literally, it started with him and has expanded to all the siblings. And it's just phenomenal. But they literally, everyone participates, which I thought was cool. The kids get the young little children, 4 years old, running around, but they sit there and they listen and they understand as they grow into it. Like, hey, this is our thing. Let's keep the money. We keep the money in the family, and the teenage children are able to answer the questions of how it works at a very basic level. So,
and why you would want to do that versus going to an outside financing source.
That's right.
So yeah, just truly phenomenal. So that was a lot of fun. I'll tell you another one that I really enjoyed was a presentation yesterday talking about large cases.
Yes.
So this one was specific to a client was a real estate investor, had multiple apartment buildings. And what do we probably have a lot of real estate investors listening, because that's just a lot of real estate investors are attracted to this concept because It's all about control, guarantees, and leverage.
Yep. Liquidity.
Right. And liquidity, having access to capital when you need it. So this client had multiple apartment complexes, and every single month he was putting $175,000 into escrow.
Correct.
And what is that money doing for him?
Right. It's probably his insurance money, his annual insurance payment for next year, and his property taxes.
Right. And it's sitting in that account for 6 months because the escrow, whoever's holding that, probably pays that bill every 6 months. At least that's how it works with the typical mortgage on a house.
Yep.
So that's $175,000 times 6. I don't even know what that is. You're approaching $1 million every 6 months sitting in an account doing absolutely nothing for him. Right. What's it doing for that bank that it's sitting in?
Yeah, they're making a good living lending that money to somebody else.
Absolutely. Sure. So instead of, look, your money has to reside somewhere. Like, that's going to be a mantra we repeat over and over and over.
Why not here?
Why not let that money reside in your own bank? So he just redirected that $175 a month into a properly designed whole life policy. And now he's got all that cash flow going into there and working for him until it's time to access that capital to go pay the taxes and the insurance and all that, and then just keep filling it back up with all the other cash flow. And of course, his cash flow is going to increase, so he'll be able to pay those loans back and all that. But what did he also have, in addition to that capital that he was accumulating? What was the death benefit?
I think it was like $23 million. He's a 32-year-old or 33-year-old client. The death benefit for this young man was $23 million, I think.
Yeah. Well, the death benefit for his beneficiaries.
Yeah.
Right. It's not going to do him good when he's gone. But yeah, so $23 million in death benefit. And that's just going to keep growing.
Phenomenal. I couldn't believe how big it was. By the time he was in his 40s, it was 30-something million. Something to think about too for y'all that are real estate investors doing these apartment syndications and stuff is that you have these capital expenditure budgets that are built into your plan when you underwrite the property and you go through, hey, we're going to resurface and redo everything with the parking lot. We're going to do the roof. We're going to these 10 units need to be rehabbed. Well, all that money before it's spent could be. In the right circumstances, that could be premium first.
Right.
And captured in a banking system that, is underwritten on a partner or, key person in the business in the syndication or whatever.
Right. So, and you don't have to have $175,000 a month to make that happen. Right. I mean, that's an extreme case, a very rare case. It's all relative. You start where you're at. Maybe you're pulling in $1,000 a month or setting aside $1,000 a month from you have a couple cash flowing properties. And yeah, you're setting, like all those reasons you just stated, you're setting that money aside. Think about where that money's sitting and who is that benefiting while it's sitting there. Just ask yourself that question. And if it's not you, then it sounds like you need to start playing banker and take control of the banking process in your own life. And it's, not just that, but, when you're talking apartment syndicators, most apartment syndicators are borrowing private capital. Sure. For that down payment, and they're paying maybe quarterly returns, quarterly dividends, or that whatever interest rate that they pay their investors. Well, that money is sitting somewhere for 3 months before it's being used. Why not capitalize a policy, let it sit in your bank until you need to use it? And then it's there for you when you need to pay your investors out. And then you just fill it back up the next month with more cash flow.
And I think we talked about this extensively. I'm not going to get into it on this video, but properly designed policies and structured policies for this strategy could work absolutely perfectly for these people.
Yeah. And I think we all, even if you're not a real estate investor, you're not a business owner, maybe you just make a pretty decent W-2 income. You're probably holding money somewhere in somebody else's bank. Now, of course, we need the banks for, debit, credit.
Yeah, to transact banking.
To transact, right?
Transactions, yeah.
Right. But that money has to sit somewhere until you're ready to use it. Well, for us, we let our money sit inside our policies working for us until we're ready to use it.
Yep.
And it's just a quick get online. Hey, I want this much money, send it to this account, done.
Yeah, I only keep the money I need in my checking account that I need every month to just, pay the mortgage, pay this, pay that, whatever, right? All my excess money, my savings, my capitalization is in my life insurance contracts. Now six of them now. So.
Yeah. So it's just a great, those are just two of the examples that we got over the last 2 days.
Yeah.
And then we talked a lot about many conversations just about the economy, an update on the economy, looking at the Fed's balance sheet, like a lot of stuff that would bore a lot of people. But if you're willing to take a little bit of time and look at it and understand it, it's kind of scary.
Yeah. Well, Nelson said, if you know what's going on, you'll know what to do. And that's the common theme with infinite banking practitioners and people that practice infinite banking is they generally know we know what's going on, so we know what to do. I liked the overall theme this week of kind of getting back to the fundamentals of what Nelson taught about, banking as a process. IBC is a process, not a product. The process over product kind of message is so important because we see it. And again, to each his own. I'm trying to kind of stick to the fundamentals, right? I didn't know Nelson. I never got to meet him, but I'm trying to, carry his message. And I think, we both are obviously carry his message forward properly and not get focused on all these third-party like calculators that show the internal rate of return of a policy and all this stuff. Like the most important thing to remember, I think, and, as a client of this and now as a practitioner is I'm focused on what's going on outside of my policy.
Right.
That's the most important thing. What am I using that cash value for? Right. So getting back to the basics.
Yeah.
The seen and the unseen. I liked that theme today. It was just phenomenal.
Right. The seen is what you see going on inside the policy. The illustration, all of that, all the guarantees and everything, which are great and which you need to look at that prior to going through with it. But that is not the focus. That's like the end game. Like, hey, we're ready to move forward. Here's what we're looking at. Let's do it, because you already know why you're doing it in the first place. And then the unseen is the massive potential and all the opportunities that you have outside of your policy that you otherwise would very likely not have because you'd be putting your money away. You could be putting it away in a savings account doing nothing for you in the bank, but most likely you'd be putting it away into some, tax deferred qualified plan where you can't access it.
Can't get to it.
Something like that.
I think our clients, the folks that have become our clients, our friends and have learned over the last couple of years of, we always kind of said, when you have capital, opportunity will find you. And it's so true, right? And we're, living examples of that. Now our clients and our friends are seeing that and living that as well through this, through the product of dividend paying whole life in the process through IBC.
Yeah.
So.
And I like how somebody pointed out today, said, what is the most important part of this entire process? It's imagination.
Imagination.
I mean, it's called infinite banking for a reason. Like, you are only limited by your imagination. I mean, it was unreal to see all the examples of what people are doing with the capital in their policies through their policy loans and the opportunities available to them. I mean, how many businesses does Jayson has? Like 8 businesses or something.
That's crazy.
And they've all been funded with life insurance money.
Yep, with life insurance policy loans, so the life insurance company's money.
Yep, using somebody else's money.
Unbelievable.
Yeah.
And then paying those loans back at 10%, which he learned from Nelson. Apparently, Nelson said, "I paid my loans back at 10%."
That's tough to do when you're like, oh, the bank would only charge me 3, the insurance companies only charge me 4 or 5. You want me to pay back at 10?
Yeah, well, I don't know if we want to unpack that. It's like, well, how much do you want your banking system to earn, right?
Yeah.
Well, you don't want it to earn 2.9%, even though that's what a bank might charge you for a new car loan or something. You want your bank to earn 10%. Mechanically, though, people are confused, and I want to make sure there's no confusion when we say, when you're paying back a policy loan, right, you're paying back the life insurance company's money. That's not adding value to your policy. The only way to add value to a policy is through premium, through additional premium.
Right.
And if your policy is structured properly, there may be room once that policy loan is paid off to take that cash flow that you were paying back to your banking system to fund additional premium.
Yeah.
Right. That's how you add value to your policy. And I know some people read his book and they get confused of, I'm increasing the size of the policy by paying back, increased interest. That's a common theme with new clients that I think I always get that question. I'm like, no, let me tell you what he's actually talking about.
Yeah. Yeah, but by paying 10%, you pay it back quicker.
You pay back quicker.
And have capital available that much quicker.
Absolutely.
To use immediately for the next opportunity.
That's right.
But speaking of the book, so what we did this time, which we haven't done in the past think tanks I've been to, is we were told, hey, bring your copy of Becoming Your Own Banker, because we're going to go through that. And it was really great everybody's, read it multiple times. I obviously, after talking to some other guys who've read it 1,000 times, I'm like,
right.
I probably need to up my number of how many times I've read this. But it's great. Somebody says, flip to this page 25, and read the second paragraph. The first line, what does that say? We read it, and then we're like, wow, let's talk about that. Let's dive in.
Yeah.
I mean, it just brings new things to light that maybe I wouldn't have seen a year ago, but because of the progress I've made and the way I've been using it and becoming my own banker, like that stuff really pops out to me now.
It does. I can't harp on it enough. I think I'm at like 6 readings. And when I say readings, I think I've read the book 4 times or 5 times, and I've listened to the audiobook at least 1 time through. Now that it's been out for the last few months. It takes that many readings, ladies and gentlemen, to really. I feel like we're experts in infinite banking, right? We are, and I learned something new. Or maybe I'm thinking about it differently.
Yeah.
Every time I read the book, I'm like, oh man, I didn't think of that before.
You just described part of the book where Nelson talks about the pitfalls, the common pitfalls, and one of those is the arrival syndrome.
The arrival syndrome, yeah.
Where we are experts at this. Does that mean we know everything there is to know and there's nothing else to learn? No, hell no.
There's no such thing of having arrived in knowledge.
Right. Why else would we be paying, I don't know, at the end of this trip, maybe it'll cost me $1,000 to come spend 2 days. I'm spending 2 full days traveling, spending 2 days in this conference, sitting on a chair, listening to people talk for 8 hours a day, taking time away from doing my business or spending time with family, whatever it is. Like I'm spending my own money, my own time to come here because I want to get smarter.
That's right.
Because I want to surround myself with people who are smarter than me, who have more experience, who are doing things maybe differently than me, and can, their imagination. Like if I have an idea and you have an idea and we talk to each other, we usually with 2 ideas. Like imagination is more valuable than money. Because if I have $1 and you have $1, when we depart, we still only have $1. But if it's an idea, now we each have 2 ideas.
That's right.
Right? Does that make sense? So the imagination that gets flowing when you're around other people who are on the same journey as you and have the same belief system as you is just
being around. I think being around like-minded people is super important. There's not that many infinite banking practitioners in North America, I should say. In Canada and the United States, there's 700 or 600. It's not many. So it really reinforces. I love being here. It's my first one, just getting back to basics, kind of re-energized, right, to the message, and just great people all around that are just doing phenomenal things for their clients. And incredible things that you don't think are possible. $650,000 of premium.
Yeah.
It's crazy.
Well, and there wasn't a single discussion about, excuse me, how much money you can make doing this strategy, or this is how much money we made this year. That's why we're up here talking.
Not like multi-level marketing rally or.
There was nothing mentioned about how much money you're making through your business. Every conversation revolved around how much value are you creating for your clients, which in turn brings value to their families, hopefully for generations, and value for your community, everybody around you.
Yeah, just the idea of service.
Yeah.
Yeah,
you're right. Just a lot of really good people in this community. You can't go wrong reaching out to any IBC practitioner from the NNI website.
Nope.
infinitebanking.org. Check out there, see who's in your local area, or obviously give us a call if you want to hear our voices in person.
Yeah, this is not my normal voice.
Yeah, thank God.
Yeah, this probably sounds pretty bad.
Yeah, well, you'll heal up.
Yeah.
Well, great, man. I think we're going to have a lot more to bring you guys from this conference as we get back and dig through our notes. But we definitely wanted to take the chance while everything's kind of fresh on our minds to put it out there, and hopefully it has sparked your imagination and got you thinking a different way. You rethink your thinking. That was a theme.
It was, rethink your thinking, and that's the challenge. But the challenge before that is developing the ability to rethink your thinking.
Yeah, it's
right. Like you have to get past whatever. You have to unlearn what you've learned.
Unlearn a lot
in order to capture. You have to catch again. This is caught, not taught. You have to capture the essence of IBC. We can't necessarily teach it to you through this podcast, right? You have to read Nelson's book. You have to read it a second or third time or a fourth time. It's ridiculously simple. Embrace the simplicity, right? I've heard a lot of people say that because people want it to be more complicated. I'm like, no, it's pay premium. Don't be afraid to pay a high premium. Build capital, and opportunity will find you, right? So, no, it's just been a wonderful experience, and I'm looking forward to next year.
Yeah, me too. Already next February, we'll be back down here.
And if you're watching or you're listening to us on Spotify or just Apple Podcasts or whatever, Dave and I are actually sitting in the same room, which is unusual. The first 5 episodes, obviously he's in Minnesota, I'm in Northern Virginia. So we wanted to take time since it's just much easier to record when we're in the same room. So we're in like a random hotel conference room with a nice.
Yeah, I don't even know if we're supposed to be in here, but nobody's knocked on the door yet. So
it's fine.
Yeah, we're all good.
We're paying customers.
Yeah. So, all right. Well, thanks everybody. And I look forward to talking to you again next week.
All right, cool.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.